Welcome, guys, to the watch list for the week of April 5th. Hope you guys are enjoying your long weekend and are spending some quality time with your families for Easter. Let's discuss the markets. In the last weekly watch list, I'm going to remove these levels for a sec. We had discussed that the indices had closed below the 50-week moving average, and usually, with that happening and the sentiment being as bad as it was, we are likely going to get a squeeze. We expected that squeeze after the Monday drop, and the squeeze was supposed to go to the 9-week moving average. Now, does the squeeze almost always happen? Yes, it does. What separates the panic situation from a clean recovery situation is what happens after the squeeze. So last year, you guys can see we closed below the 50-week moving average. We got the squeeze to the 9-week, and then we dropped for one more leg lower. All right. Similarly in 2022, we closed below the 50-week, got the squeeze, and then we went for the leg lower. Now, are there some cases when we don't get that leg lower? Yes, there are. In 2018 also, we got the squeeze and then we went down. But you guys can see in 2015, we closed below the 50-week, had the panic over the weekend, went for the squeeze to the 9-week, and then made a higher low. All right. Again, it happens. It's just not the most obvious situation or the ones that happens all the time. A lot of the times we get that next leg lower for the panic. So what separates the two situations? I'm going to show you some more examples. In 2012, you guys can see we closed below the 50-week moving average. This is where the sentiment went in the dump, got the squeeze to the 9-week moving average, and we made a higher low and did not make another panic sell. Same here. Went to the 9-week, did not make a panic sell, made a higher low on the weekly charts a few weeks later, and then held off. So what separates the panic situation from the recovery situation in this case is if we go below the prior lows. We had the close below the 50-week moving average. We had the sentiment in the gutter. We got the squeeze to the 9-week moving average. Whether we break these lows or not determines if we are going to have another panic sell. All right. So it becomes very, very, very crucial that these Monday lows are not breached. If they are, we are going to get another sell off. I don't know how deep that's going to be, at least a retest of around this 540 area. If we go any below that, we could be going for this gap that we left behind back in May. So now let's bring the levels back. I guess you guys get the context, at least in terms of structure. I've shown you enough examples of the two kinds of scenarios. In the last weekly watch list, we had discussed that as long as we were below this 576 to 580 area, we were bearish on the weekly charts. Once we got above that, until this 592 to 595 area, we are neutral on the weekly charts. Above this, we can be bullish. So obviously the squeeze did good for the markets. We came back and closed in the neutral territory. But what happens from here is more important. If next week market can ignore all the bad news, all the craziness from Trump, even a ground invasion, if we close above 595, bulls are back in control. I don't care what's happening in the news, price is accounting for it all. If we go back and close below 575, we are back in the bearish territory. We go back and retest these lows and most likely probably not hold them. We're going to go to around 540 area. And after 540, things get trickier, 514 and so on. So those are your levels for next week. If we can close above 595, we likely go to around 608 to 610. And after that, we have around 634 to 636 area. Those will be your levels on the upside for QQQ. Now, what else is there in terms of context? We have PCE report and CPI reports coming out on Thursday and Friday, respectively. Why do these inflation reports matter? They matter because inflation is starting to become a big issue, especially with what's going on in Iran and the Strait of Hormuz situation. Are the prices already going to reflect what's going on in Hormuz? Maybe not directly, at least oil prices should. But in terms of other commodity goods, we might not see the impact of inflation until for at least 1 or 2 more months out. So that's the situation in terms of news. What about the geopolitical news? Well, Trump, I think, tweeted out something right now that Iran has 2 more days to accept the peace deal. Otherwise, there's going to be hell and fury. If we have known anything about Trump, it's that he contradicts himself every 10 minutes. So there's no way to know what's going to be on that side of the situation. All we can do is trust our levels and let them guide us. All right. So I've shown you clear examples of many situations where the markets either panicked completely or they had an initial fear similar to what we have right now, and then were able to get out of that fear without panicking completely. So we'll see which side of the coin we fall on this time. But the reaction from this 9 week moving average and the fact if we can make high weekly lows or no, higher lows on the weekly chart or not, is going to determine what's next here. All right. I can't make it any simpler than that. That's the context. What about SPY? It's the same thing. All right. We have the squeeze to the 9 week moving average. Right now it's to the 21-day. So when I say the 9 week moving average, all right, what I'm saying is that next week price can come even higher, but as long as if it closes below this area, then we are getting rejected, which means that obviously we had a very good bounce this week, and this 21-day, we already are here. If we get above that, we can even get to the 50-day. But if we don't hold above this weekly support, that's gonna be just part of the squeeze. It's not gonna be anything substantial. So that's the situation for SPY. We had the weekly levels last week. We closed back above the 50-week moving average, which is good. I've also told you guys I'm a bit, in terms of my SPY allocation, I do it like a brain dead person. We closed back above. I got back in on Thursday in the last 15 minutes. If we close back below next week, I will get back out. I'm not going to not going to say that I know more than the market. All right. So we are back in the neutral territory on SPY. If next week we can close above 670, good. We are back in the bullish territory. We can go to 695. If next week we go back and close below 642 area, then it's bearish and we can go all the way to 620. Now, if you guys remember in the last weekly watch list, I had said 632 was the level that could hold, and that's the one that did, right? That's where we bounced off of. So that's the situation in SPY. Now, what about the individual levels on the daily chart? I will discuss them in each daily analysis. There's no point in trying to discuss them right now, especially with the kind of gaps that are opening up in price every single day. All right, so that's the situation for QQQ and SPY. Just off the fact that we closed above the 50-week moving average in both SPY and QQQ and are back in the neutral territory. Obviously, we don't start going long on swings, but we do need to start paying attention to the names that held stronger throughout this pullback so that they can be on our list for the new swings in case the market is able to recover this 9-week moving average. All right, let me rephrase that so it's clear. Nobody knows if last week's recovery, if last week's bottom is the real bottom, or if we have another leg lower. I showed you guys examples of both those situations. What we need to do is be prepared in case it was the bottom. If this was the bottom and we are able to close above the 9-week moving average next week, obviously the leaders, the names of interest in the next bullish run will have already been breaking out, or they would be closing above the 9-week moving average before the indices do. So what we need to do this week is, in the weekly watch list, identify the names that have relative strength to the indices because they are going to be the ones leading the market. All right. So we are going to be doing that. I have a few names and sectors that are setting up well in case this is the bottom. If it is not, well, we'll have another leg lower and we'll see what Trump does. All right, so that's the situation in QQQ and SPY. We have discussed levels of interest as well as the context. Now let's move